The halt to the bullish run-up from the end of 2023 is quite clearly displayed on this chart of IWM. Then with the addition of some fib time zones and a spiral, attention can still be focused just under 200 in the near term, in which case a resumption of the larger uptrend from last year can look something like this, where the main focus for a bullish perspective would be to advance up into the upper half of the 201 to 211 range by mid-March. On the other hand, failing to get consecutive closes into the 200s by the second week of March, generally following the curvature of the spiral near these time zone lines down towards that 169 level, which could become the lower boundary of a larger bearish reversal range. Now to the AMD chart, where last year's downtrend from this double top provides good reference for a trend-based Fibonacci time zone. Most relevant is the 382 line near the recent downswing. We can get some similar alignments with a regular Fib time zone based from the start of the past uptrend. Then a regular Fibonacci retracement for some horizontal levels. The result is this rectangular area of interest. Then a new trend-based Fib time zone can help project what a more developed bearish reversal could look like during the formation of double and triple top patterns. Now, even if price is to continue closing above the lower 160s, it would be most advantageous for a bullish continuation to take place within the next 2 to 4 weeks. Otherwise, there could be doubt of longer-term bullish momentum. If AMD were to drop under the 160s, it would look something like what happened to Intel here. In this particular case, a double top accelerated by an earnings gap down. In a scenario where the bearish advantage is maintained, price can go from the flatter gap down range to a slope like this, following these fib channel lines. Though even then the slide could slow down according to the placement of these arcs and the spiral. Of course, even a rapid break over the mid-40s to fill in the gap can result in these kinds of outcomes, where a fib time zone based on the gap down highlights intersections where resistance could be even stronger approaching the 50 barrier. Next is Visa stock chart, where combined fib extension levels point to the mid-280s as the next strong barrier to advancing higher. Add a fib fan for an idea of some more moderate trend lines for price to fall onto. A more aggressive incline in the short term can look like this, though ideally it would be best to stay flat a bit longer then fall back down and rebound around 263 to begin a shallower incline. Then there's Meta stock recently gapping to new highs after earnings. A fib retracement can give some idea of horizontal levels in the event the gap down is filled. Add those time zones and it appears the gap down can remain relevant at least until early to mid-March. In a scenario where a steeper incline avoids a gap fill in the near term, 550 would seem like an obvious destination, but also take into account these lesser used fib extension levels marking the 520 area in between. This kind of gradual slide doesn't seem that likely at this current time. Instead, a few consecutive closes under 450 could more quickly accelerate bearish sentiment to fill in the gap heading towards mid-March.